Hello, and welcome to Your Money 2.0. I'm Tom Fox, Community Outreach Director of Cambridge Credit Counseling. This week, millions of Americans will be rushing to meet the tax filing deadline of April 15th. After that frenzy is over, most people will naturally turn their attention to what they owe, or if they're lucky, to what they'll do with their refund. So far, this tax season has seen an increase in refunds. The IRS recently reported that as of March 20th, they've already refunded $183 billion, a 14% increase from the same period last year. This means that people who filed already received an average refund of $2,740. The increase has been fueled by special tax credits and deductions brought on by the recession. What should you do with your refund? The answer is different for each of us. While many of us are tempted to spend our refund, we also understand the severity of the current economic situation. Things are rough out there, and while everyone can speculate as to how things may work out, no one truly knows how long our recession will last. Therefore, each of us needs to do the best we can to ensure we're prepared for financial emergencies. As job losses continue, perhaps the best use for your refund is to save it. While none of us plans on losing our job, the logic of hope for the best but plan for the worst applies here. Our recommendation is to have a year's worth of expenses, including mortgage or rent payments, utilities, groceries, etc., put away in an emergency fund. Your refund will make a good contribution to this goal. If you already have sufficient savings, save more. You can never have too much cash on hand. If you're comfortable with the amount you have in savings, you can commit a portion of your refund to paying down your debt. Ideally, you would focus on eliminating high interest rate balances first, then move on to those with lower rates if you have the money to do so. Receiving a refund is a welcome influx of cash, but it is important to keep in mind what a refund is. A tax refund is really the repayment of an interest-free loan you made to the government. Instead of letting your money work for you throughout the year, you lent your money to Uncle Sam. Let's take a look at how this may have affected the bottom line of the tax filers we mentioned earlier, the ones with the average return of $2,740. If they were to take that money and divide it by 52 weeks, each of them would have an extra $52.70 in their paychecks, or an extra $210 per month. Given the state of our economy, wouldn't you rather have that money working for you? Well, you can. Simply speak to your Human Resources Department to file a new W-4 form adjusting your allowances. With times being what they are, imagine what a few extra $100 can do for you. Well, that's it for this edition. We welcome your feedback and ask for your thoughts and suggestions, which you can email to us at yourmoney2@cambridgecredit.org. Thank you for watching. Until next time, I'm Tom Fox for Cambridge Credit Counseling.